Okay guys, for this drill what we're going to be looking at is a binary trade and a specified binary trade. Now neither of them in fact have anything to do with the actual rate, both focus around language, and we'll come on to what exactly we're looking at there in a moment. So this is the ECB. Now by this point, the beginning of 2019, the ECB has wound down its QE, so there's no more asset purchases. The previous meeting, being January, gave very little in terms of information on the statement. Because we have no asset purchases and no guidance on them, the ECB has very little in its actual statement, so it's down to a couple of key lines. Obviously, to start with, you get the interest rates, then you get their guidance on interest rates. Their guidance being the interest rates will remain at their present levels at least through the summer of 2019, and that's the key bit, is the guidance on when the interest rates will start to rise, and in any case as long as necessary. The second phrase that the ECB is using now is that the Governing Council intends to continue reinvesting in full principal payments from maturing securities purchased on the asset programme for an extended period of time past the date when it starts raising interest rates. So the two are linked. What this means is that until they raise interest rates, they will continue to reinvest any money that comes due to them from the bonds that they have already purchased. So as a bond matures, they are then going to reinvest that money. So that was the previous meeting. Going on to the March meeting, we'll go and have a little look at where the expectations were lying, also in terms of sources that had come up. Now going into the March meeting in 2019, things had started to get a little bit more turbulent in global markets. The Fed had already decided that it was no more interest rate raises to be putting in place, and so was then stepping back there. The ECB has yet to actually make any further decision on any forward guidance, and they seemed reasonably set that they would maintain their guidance of rates will rise at some point beyond summer 2019. We then get a few sources comments. First up, that the ECB has time to change rate guidance and that a TLTRO is seen as a priority. The ECB, in light of downside risks becoming more apparent, has now, through other channels, started to suggest that they could implement a TLTRO, a targeted long-term repurchase operation. This then is a way of giving more liquidity to the market without reinstituting QE. So the sources then go on to say that some policymakers hesitant to change interest rate guidance as it would impact the term of the next president. As we know, Mario Draghi leaves the ECB in October 2019. Now, the idea here is that they're suggesting they won't change that summer 2019 language, because this would then push it beyond Draghi leaving and mean that it would now be the next president already forced into a position where they have to follow up on the language that's been changed. Further sources then start coming out that the ECB is to cut growth forecasts, and that it could actually have a discussion of whether it would change the through the summer guidance on interest rates. The announcements of TLTROs are not likely to come in March either. So sources sort of suggesting that some of these, certainly putting into play the idea of rate guidance changing and a TLTRO, but neither of which are actually expected to happen at the March meeting. So in terms of expectations, what we have here is no change in policy or language, potentially a new TLTRO, and then in terms of further guidance, perhaps in the statement we may well get a downgrade of forecasts because GDP had been falling, also a downgrade of inflation guidance, so to suggest that inflation may be subdued for a longer period of time. This would come more in the statement. In terms of market pricing, the first rate hike is now being pushed into 2020, so beyond where the ECB is suggesting that the first rate hike would start to take place. Only marginally since the January meeting, so it's slightly moving excuse me, those rate expectations out, but not by a great deal. So that's the expectations. What we then got the day before the ECB was one final sources comment. This suggesting that the ECB would cut the outlook and in doing so, this would then warrant implementing TLTROs. And so it would then actually start holding discussions on these, so that they would likely come in March and then further discussions would be had. Now look at the reaction of the BTP compared to the Bund. The BTP is the one that's set to benefit the most from this. Italian bonds are more under pressure than Bunds. Italian banks need liquidity more than German banks as well. So for that reason, the BTP is the one that is going to have the larger and more prolonged move. The Bund, and this is very, very important for actually trading the decision, moves up on the initial suggestion of a TLTRO and falls all the way back to the scene of the crime, SOC on the chart. After it then starts to stabilise, then the Bund starts to follow the BTPs up, whereas the BTP continues the move straight from the beginning, jumps up and then continues on from there. That's key information, particularly when it comes to actually trading the ECB decision. So that's the source's reactions. It now seems relatively clear that a TLTRO is likely, and the really, really important bit is going to be whether they do actually change language regarding that summer 2019 guidance on interest rates. So let's go and have a look at the actual trade opportunities, and this is what you're going to be looking for when you're doing the drill, when you're actually trading this ECB. First up, you've got the TLTRO. Because this has been so well talked about from sources both prior to and the day before, it now seems that there's a trade either way. So this is quite a binary trade here, and like I say, this is a binary trade based on language. If they bring in a new TLTRO, this is going to be a buy. It's going to be seen as dovish, so it's going to be a buy for bonds, it's going to be a sell for the euro. In taking this trade on, because it is reasonably well expected, particularly following those sources, it's perhaps more a smash and grab trade, that you get in, you take the first move and you get out. If you are looking to hold anything, BTP is perhaps the one to hold. Now if they don't implement a TLTRO, this is where you're going to have a sell the bonds, so sell the Bund, sell the BTP. Because the BTP rallied so much the day before, that would be the one that you'd want to hold on to. The euro would still be the same principle as the new TLTRO and be very much a smash and grab, but with no TLTRO you would see a bit of relief and the euro bouncing to the upside. So short term, quick trade to be had on that TLTRO. Where the bigger and perhaps more prolonged trade, the trade where you can hit and hold, is the extending the rate guidance beyond summer 2019. Any suggestion, and this is why it's a specified binary trade, because there are multiple outcomes, all of which would mean the same thing. Any suggestion that they could extend or that they would keep rates at their present levels through the end of 2019 into spring 2020 through summer 2020, anything along those lines would be seen as very, very dovish. It's a shift in when they're actually going to change interest rates. For this would be very much a buy bonds. It would also be a buy in equities because of the interest rate element, and a sell in euro. All of which you would be looking in initially, at least for the first sort of half an hour, to be very much a hit and hold that trade. Even if it does pull back, you're still likely to see this move continue. Remember what I said about that Bund on that TLTRO sources comment as well, that initially it jumps up, pulls back, holds, and then goes again, so keep that in mind. The only other element that we get in the first statement is the reinvestments, and whether they give us any clue on what an extended period of time is. At the moment, the market seems to believe that this is 2 years, so that they will continue reinvestment for 2 years beyond the first interest rate rise. If they clarify this, so if you get anything on reinvestments that suggests that they would reinvest for 2 years after the first rate hike, then this would be seen as very dovish. If it's less than 2 years after the first rate hike, then this would be seen as much more hawkish. It would be a sell the Bund, buy the euro situation. Finally, a big surprise would be if they downgraded confidence in inflation in the 1245 statement, and that's what you're going to be trading. So if we did see that come in, that would very much be a buy Bund. It would also be a sell euro trade. But the main bits that you're looking for is is that binary trade on the Teltro and then your specified binary trade on the rate guidance, whether they change it or not. Any change that goes further than summer 2019 would be seen as particularly dovish. Right, so let's go and have a quick look around the markets and a look at where these markets can be going. First up, I've got BTPs. Now, you won't be trading BTPs, but when we have a look at how this was traded, we can see how the BTPs reacted. BTP has rallied on those earlier comments from the sources the prior day and left a close up at around about the 128.55s area. Very little on the way down in BTPs until you start getting down towards 127.70s, 127.50s area. So fair bit of space in BTPs. Further on in BTPs, 128.73, and then finally 129.22 for the high volume, much higher up. Now, the markets that you are going to be trading. Bund first up. In terms of areas to be looking for in the Bund, to the upside, you've got the beginning of this drop that we've had from a week or so prior to the meeting. That starts off at 163.92s. Further on from that though, you've then got the poor highs. You see the multiple highs in that box there. These begin at 164.05 and extend all the way up to 164.15. So that would be your bigger target to the upside if you're taking any trade long in the Bund. Remember, it's more likely to be a bigger move to the upside because of if there is something to give this market a move up, it's likely to be a change in the rate guidance. That's going to drive a bigger move up. Whereas a move down would be a no Teltro and no change in rate guidance. We're not expecting rate guidance to move, and no Teltro would be perhaps a little bit of a shorter term dip. So you'd be looking more down towards 163.51 down to 45, 31s, and then finally 12s. Now 12s would be quite a long way down to get that just purely on the back of no Teltro. So that would be something more of a surprise. Any move down is perhaps more a move that could be faded as opposed to continue to try and sell. It would be more of a short term smash and grab if they do not do a Teltro. Moving on to the euro, and what I've got here is a daily and an hourly chart. Now levels to the upside in the euro, first place, nice and easy, just above 113.35, so that's the top of the recent small range that we're in. Beyond that, you're then looking up towards 113.55 to 60s, and then all the way up towards 113.67s, which brings in these lows over here. Now to the downside, we run out of levels reasonably quickly on the hourly chart. You've got 113.07, the most recent or very recent swing, and then beyond that you're looking down as far as 112.95. Past there, you're then getting onto the daily chart, and your next levels coming up are 112.60 and then finally 112.49. So the two lows on that daily chart. So that's what you got for the euro. These charts will be visible as you start to do the exercise as well. Read through the cheat sheet before starting, but what we are looking at, I've got the trades set out there as well. The Teltro, bringing in a new Teltro, the dovish trade, obviously you have the flip of that if they do not bring in a new Teltro. Any change to language is going to be crucial. Any extension to summer 2019. So if they suggest that rates will stay at their present levels through spring 2020, for example, through the end of 2019, that will be seen as very dovish. If it's unchanged, there isn't really a trade on it because that is the expectation. Finally, you've got the forecasts, but again, these are likely to come much later. It would be a surprise if they come in. If they do, and they come into the 12.45 statement and are lower, then this is going to be a buy the Bund and sell the euro if they've all come in lower. But this is much more likely to come as part of the statement. So the Teltros are your binary trade and are more of a smash and grab trade. The language change is going to be much more of a hit and hold type trade. Now, if it is a language change and it is dovish, it is going to be more that you're looking to buy the bund, sell the euro, and try and hold on. So, the drill. Have another read through the cheat sheet. Make sure you familiarise yourself with that, familiarise yourself with the charts. Set your replay up for 12:44 on the 7th of March 2019. Trade this for 30 minutes. Trade the bund, which is FGBL9, FGBLM9, and the euro 6EH9. Also, start the attached video, the ECB release, when the replay hits 12:44 and 30 seconds. This will then give you a real-time release in time with the replay, so as you would see it if trading the real market. After you've traded that, start the quiz. You'll be able to complete this, and then there will be an answer and run through to follow, where we will look at the bund, the euro, the BTP, and maybe a little look at the equity markets as well. Good luck with the drill, guys. Good luck with the quiz, and I'll see you for the rundown afterwards.